Hello everyone and welcome to Good Morning Trading. I'm delighted to have you with us. Let's take a look at the latest economic, political, and stock market news for this last day of the week. So heads up, it's the last day of the week, which means fund managers are going to be extremely cautious. We might see some slightly odd fluctuations for a few seconds on the indexes or on certain specific stocks. They might take their profits or cut their losses. In any case, they'll be lightening up their portfolios. This is the time for scalpers to be as light as possible. We close out every evening with 100% cash, so everything's fine. We have no open positions, which is perfect. Why? Because over the weekend, there could be a surprise event. 3 oil tankers on fire in the Strait of Hormuz, causing some kind of instability. And that happens on Monday when the financial markets open. There could be a big drop or maybe a big surge if there's a totally unexpected announcement. So caution is necessary. That means on this last day, prices might move in a quote-unquote strange way, but now you understand why. Be careful with this day as well, because there are 3 important statistics coming out in the United States. So French time, 1:30 p.m. since we're still on daylight saving time. In the US, that means the American markets open an hour earlier, close an hour earlier too, and all the statistics come out an hour earlier. So it'll be at 1:30 p.m. What kind of statistics are we talking about? We have several reports coming out at the same time. There's an employment report, a report on consumer sentiment, the famous Michigan Index, and most importantly, the PCE Core Index, which is the measure of inflation in the US. All 3 reports are released at the same time. Sometimes we wonder which of the 3 reports has the biggest impact. The answer is simple. Right now, all the markets, all the investors are focused on the inflation index. Especially since next week there's a Fed meeting, a meeting of the FOMC, the Federal Reserve, which will decide whether to raise, lower, or keep interest rates steady. At first glance, there's absolutely no indication that interest rates will be lowered, since the statistics we're about to get are from before the war with Iran. So the Fed will probably be extremely cautious. They'll keep rates steady and say that at the next meeting, they'll analyze whether the war has had an inflationary effect. I'm willing to bet they'll play it safe, and that's completely normal. That's exactly what we expect from people that important. Although there are people who are very, very important, more important than the Fed members, and sometimes they do whatever they want. But at the Fed, on a global scale, things are still pretty serious. There's still a bit of seriousness there, my friends. Alright, let's analyze the prices. So, $95 for a barrel of oil. I'm guessing you've seen it everywhere on your news feeds on Twitter and other media. High-quality sources for the middle class are saying that the price of oil has gone above $100 a barrel. But as you can see, the highest it actually reached was $98. Now, you might ask, why did they lie to us? Well, yes and no. I don't think they're lying to you. I think it's just incompetence, because they took the price of oil from a contract with a later expiration date. So these are the current oil barrel prices being traded right now. So we're still below $100. And they probably did that to create a bit of a buzz too. So whether it's incompetence or manipulation, it's up to you to decide. They use prices from contracts with later delivery dates. And with those later contracts, you have to pay interest rates. Well, yeah, obviously, they're not going to give you that for free. You shouldn't be dreaming either. So basically, if you take a contract for next year, well, of course your barrel of oil is going to be well over $100. So be careful, especially since they update their numbers about every 24 hours. So when the market opens in the red, and then 2 hours later it's down 2%, and then 2 hours after that it's up again, all day long they're going to tell us there's a crash in the stock market values, even though they're actually leading the pack and just keep going up. There you go. That also shows you the level of professionalism. What do you expect? When people talk about things they don't understand or know, that's what you get. So I can reassure you, you can see it for yourself. These are the official live prices for WTI futures. That's the benchmark oil. We always use that as a reference. It's American oil. It has never gone above $100. Still, there's been a slight increase. We went from 85 to 95. There you have it. Okay. The markets are a little worried, but we're definitely not in a catastrophic situation. We can keep prices at this level for a long time without it being particularly inflationary. Like I said, ideally, the best of the best is around $75 to $80. That works out great for everyone, for both consumers and producing countries. But as we can see, for now, we don't know what might happen. The Strait of Hormuz hasn't been mined. We're gradually learning that all the Chinese and Indian cargo ships are getting through. Business goes on as usual, at least for the Revolutionary Guards. But still, try not to mess with oil, because I'm about to make a bad pun. The slightest spark could make a barrel of oil explode, which, by the way, is totally untrue. Because you can always try it yourself. It's actually really hard to make a barrel of crude oil explode. Really hard. You can set it on fire, but making it explode is a whole different story. It's not explosive at all. At least not when it's crude. Our friend, Bitcoin. Still hovering around $70. Right now, it's technically positioned at the top of its range. Something to keep an eye on. Definitely keep an eye on it. Technically, it's looking pretty good. Pretty good. It almost feels like they want to push up toward the middle. If the monthly R1 were to reach 73 from here, technically that wouldn't be surprising at all. For now, we're in a range. I can see that very clearly. The low point is around 69,000, and the high point, we're at $72,000, and it's been bouncing back and forth between these two zones for the past 2 weeks. There's really nothing more to say about it. Gold continues its slow but steady decline. We can see that the markets are starting to realize that we're staying put. Thank you. Maybe we're heading into a long war, but there aren't really any clear bets, so to speak. The chances of Iran invading the United States, with Iranians taking over New York and Los Angeles, are pretty slim. If you ever find a bookmaker willing to take that bet, let me know so I can put all my money on it. Well, I think the return would be 2% at most, unless the bookmaker has a death wish. So, as we can see with gold, the global situation is becoming less and less worrisome. Little by little, we end up getting used to it. I just hope it doesn't turn out like Ukraine, where we get used to it, 2-3 years of war. And then, in the end, nobody talks about it anymore, doesn't get any attention, people just get tired of it. The Nasdaq, my little favorite, is interesting. I put a bit of emphasis on the Nasdaq. We hit the lowest point Monday morning, right at the first second the futures opened. We dropped down to 24,000. Then we had that fantastic rebound, which gave us over 1,000 points. We started consolidating, and now for the past 2 days, we've been dropping almost in sync. It looks like a sweep. A wave of decline in the morning, then a small attempt at a rebound in the afternoon. Same thing yesterday. A wave of decline, a small attempt at a rebound, and we systematically stabilize on a support level. Right now, we're stabilizing on the weekly middle S1, which is roughly at 24,500. We've retraced about half. So what do you want, downside or upside? Right now, we're exactly right on the mark. At the halfway point, 24,500 with lows at 24,000 points. As of May 25th, we're at 24,500, right in the middle. As if nothing had happened, really, except for a 2% drop over the week, even though we were at all-time historic highs. Let me remind you, on February 27th, which wasn't that long ago, just a day ago, we were at the highest point ever on the Nasdaq. So we're down 2%, maybe a bit more. Let me do a quick mental calculation. Let's be bold today. Quick math, the highest was, let's say, 26,400, and now we're at 24,400. The sharpest among you have already done the math. You can tell I'm trying to buy some time because I'm tired. Let's just estimate. We're down about 1,800, 1,900 points from the top. 1,900 points on an index that's worth 24,000. You divide, and so that gives us 240 points, which makes 1%. So that's 4%, 6%. 6.3%. There you go, man. 6.3% drop compared to the all-time historical high. Before, we called data consolidation or a little profit taking. Now we call it a major war. See the difference? Actually, the market is holding up incredibly well. I've been trading for 30 years, and I'll even tell you, 20 years ago, 15 years ago, with the situation we have now, the markets would have dropped 25, 30% in less than a week. In a week, we would have been down 30%. In 15 days, we've lost 6% from the all-time highs. So just a little profit taking, and now they're asking themselves where to buy back in. So we're definitely not in a panic move right now. What interests me is the 24,500 level. So yeah, yesterday I had a blast at the 750 mark. We talked about it. It bounced off the 750 level several times. I hope you grabbed them on Friday. It's a little crazy, honestly. We're in the middle of nowhere right now. For me, I have no idea. If we're gonna get a bounce at 500, that'll act as support. We'll go back up to 750. If we keep seeing, like we've had for the past 48 hours, a stepwise drop, we'll see. We'll go down. Maybe to last week's low, or even last month's low, and stabilize there. Then maybe there'll be an attempt to bounce back. Honestly, I have no idea right now. And when I don't know, you know what I do? I wait. I wait to find out. I wait until we move a little out of this zone. By the way, you can see there was very little activity overnight. Nobody really knows where we're headed, especially when we're right in the middle of nowhere. Because what's the midpoint, well, the median between 24,000 and 25,000? It's 24,500, right? So we wait, we'll see. We'll just see what happens. Still, there is a slight bias over the past 72 hours. Bearish, of course, but we'll see. In any case, it doesn't exactly feel like a rush to go after all-time highs again. I did tell you so. We had Oracle, which reported some great numbers that should have made the Nasdaq jump, but it just kept the Nasdaq hovering around 25,000. So right now, we're more in a downward zone. But considering, why is it that good news just makes things stall? It doesn't push them higher anymore. And when there's no news, we just drift down, slowly but surely. But be careful, we've got some important stats coming up. There are 3 important stats being released at the same time. At 1:30 TN, that's pretty much what's going to make the call. As for the S&P, I won't even get into it. It's exactly the same situation. It's trying to stabilize around its monthly S2 midpoint. And the Dow Jones, I told you before, it's the one dropping the fastest right now. Everything industrial or energy related is directly affected by it. And we're pretty much at the lowest point in the last 15 days on the Dow Jones. Monday was a good day for shorting, or the beast is finished off, so stay cautious. If you want to short, we're still getting close to the bottom. Down here, we're approaching the yearly low on the Dow Jones, so it's still a bit risky. But if things go wrong, it's the one that suffers. That suffers the most. The Nasdaq has managed to get by, more or less. The DAX is actually doing pretty well. The DAX, if you look at it, it's kind of sneaky right now. The DAX, stuck on its middle is 3 months in. It's not moving anymore, which is actually kind of reassuring. If you're an investor in the DAX, it feels like it's just waiting for some good news to take off again. And with bad news, well, frankly, when it drops a little, it goes down to its 3-month support level, and then it bounces back. It comes back up. It keeps stabilizing systematically above 23,000, above 23,500. So there's no real urge to sell the DAX at any cost, unlike the CAC 40. Nothing happening there either. Right now, as I'm recording this show, it's 7:51, so the CAC 40 hasn't opened yet, but it'll open below 8,000 points. It's slowly getting closer to 7,900, which was last week's flow. Now, this one isn't really an index to get excited about because it's just stagnating at its lows. It's come to terms with it. I'm hopeless. I'd never get a 5 out of 20 in history. You can really feel there's a kind of giving up on the DAX, a sense of discouragement. But since nobody expects anything from it anymore, it's not the one that's likely to drop the most because people have already pulled out a while ago. I think when it comes to the CAC 40, it's the Dow Jones that's likely to take a hit. That's the one that managed to go down. I think if there's a new wave, a wave of decline. All right, back to the camera, full face. Look, I'm glad to see you again. I wish you a good Friday. If you made money this week, take a break. It's all good. Let others take the risks in the stock market. It's like the army. You have to let others take the risks. For example, if one day you do your military service, or maybe you were lucky enough to do your military service, like me, you'll learn quite a few things. You'll learn how to sweep, you'll learn how to clean toilets, you'll learn how to kill people. I don't know which of those three has been the most important in my life. To this day, it's probably sweeping. That's been the most useful to me. Killing people? Not so much. For now, we're still gonna use those techniques a lot. But what I really understood is that when someone asks for a volunteer when you're on patrol, you never volunteer. That's when you put on your Jedi invisibility cloak, because the 2 or 3 guys who get picked, like when the lieutenant or the captain names the scouts, those guys are it. For what? They're there to go ahead and see if there's a minefield. So how do you know? If the guy blows up on a mine, to find out if there are any enemy machine guns hidden, as we know when the enemy machine guns fire at the scouts. So never be the scout in the stock market. And right now, in the positions we're in, on the supports we're on the indexes, the Nasdaq is right in the middle of the desert. That's no coincidence. If we're at 24,000 on Monday morning, we're at 24,000 on Monday evening, and then we're at 25,000. And we end up at the end of the week at 24,500. There's no such thing as coincidence. So my advice, put on your Jedi invisibility cloak. Look at your feet, and whatever you do, don't make eye contact with the lieutenant or the captain. You can feel they're about to appoint or pick some volunteers. So just keep looking at your feet. That's exactly the kind of situation we're in this Friday. We're in the middle of a desert. Let other guys take the risks. Let the buyers take the risks to see if things take off. If it takes off, we'll just follow along quietly like cowards. If the short sellers take control, let the short sellers take the risks. If things blow up, it's not looking too good in the current situation. And it's not great for the oil guys either. If it drops hard, we'll just follow along like cowards. If you want to survive in the stock market, be a coward. Thank you. If you want to survive in a military conflict, okay, fine. With that, I wish you a great weekend. We'll meet again on Monday for Good Morning Trading. Ciao.